so today, kind of talking about, and when we start talking about this, we start talking about tax credits, and accountants, financial people understand this. I mean, kind of. But I think regular people get confused because what are the difference between tax credits and tax deductions? And can I just do one of them? So help us out kind of with the basics.
Yep. And there's actually probably three things: tax credits, tax incentives, tax deductions. And I can kind of go into incentives a little bit too. But
Yeah.
in general, a tax credit is a dollar for dollar tax savings. So if I have $100,000 tax credit and my tax bill was 400,000, I'm going to reduce that to 300,000. I'm going to use my credit to pay part of my income taxes. So it's very valuable. A deduction is a straight reduction of my taxable income. And so if I have that same 100,000, but now it's a deduction rather than a credit, the credit saved me $100,000. That's what's going back into my bank account is $100,000 for a credit. For a deduction, I'm going to take the $100,000, reduce my taxable income. Let's say I'm in a 30% tax bracket. I saved $30,000, 30% of the 100,000. And so that's still a nice savings, but obviously a credit's a lot more valuable than a deduction.
Well, and the tax deductions are kind of like your normal expenses,
Yep.
right? Like you're always going to have them, whereas tax credits have kind of a different purpose. And, some of them, like I don't even think I know as much about tax credits as I should. But like, what is the purpose of them specifically for business owners? But also, I guess I always remember like people buying them. And so maybe you can help us understand like how we acquire the credits.
Yeah, it's so the credit's usually tied to some kind of incentive. You get a credit because you're doing something that Congress has to. If we're talking federal credits, that Congress has decided should get an extra incentive for you to do this, whatever it is. And so a few common ones are research and development tax credits, or a big one recently that everybody's heard about was the employee retention credit. And those were out there, R&Ds out there to put an incentive on companies to do R&D projects within the U.S. rather than outsourcing it overseas or to another country. The employee retention credit was there because you as a business were either affected directly by COVID, by a reduction in revenue, or by being shut down by some government mandate. So it's usually the credits out there as an incentive some way or another compared to just normal operating expenses. You pay your rent, normal operating expenses. I get to deduct that. You go out to bring a client out to lunch, normal operating expenses. Although those are often treated a little bit different. Although in 21 and 22 we get a full deduction for that. So that's why credits exist, to really put an incentive on businesses to do something extra than they normally would have done.